if it isn't the old internet. Hello, internet. How are you? Nice to see you, people. Hope you're all having a terrific Monday in the hours before traditional market open, and that you're all having a fun time trading or consuming silly entertainment about what's happening on the markets, specifically all the markets news covering, right? Basically, all that market madness that makes market makers much money. Why is that? Well, because if you're a market maker, you provide liquidity to a market. And when there's volatility, market makers who know what they're doing can make quite a bit of money trading assets that are volatile. Look, they can make money trading non-volatile assets, right? If they have the liquidity for it. But providing the liquidity in a volatile market that has both lots of great expectations and lots of fear at the same time, which it typically does, especially in the markets we see today. Well, you get to exploit the weakness of human psychology in that sense when you're a market maker with significant liquidity. And while that may not seem fair or right to the average retail trader, that is part of how the market works, whether you like it or not. And the reason that it works that way is because it's built that way. Those are the rules. Market makers are people who provide liquidity, and you need people who provide liquidity in order to execute trades. You need people to provide money to the market in order to execute trades. It's not that complicated of an idea, right? It's really just very simply when we see markets need grease in the wheel, and they usually do, well, markets turn to market makers to provide more grease in the wheel to keep things. I write fan fiction and I practice it. That's what happens. Fan fiction, just fiction about imaginary scenarios in society. Anyway, the not imaginary society scenario that I'm talking about has to do with the markets, right? And the fact that we're seeing all kinds of wild expectations about what market prices should be doing right now, what they're doing, where they're heading, where they're going. And people are a little bit exuberantly irrational. There is an irrational exuberance in the marketplace in terms of pent-up expectations. People who are holding on to the desire to see the market go up irrationally, not paying attention to the fact that the smart money are purposefully not letting that happen. And when I say purposefully, you say, what? Somebody controls the market? Yes, people do control the market. People in the market control the market, and specifically the ones who have the biggest bags, the biggest positions, the best information, and the best speed. They control the market. You may not like that, That may be against your ethos, but that is the reality, right? There's a reason the HFT firms make billions of dollars in profit every year, and other companies in the market don't. They're the ones who have the big bags to trade. They're the ones who have the position size to be first on the order books. They're the ones who have the information to know what's probably going to happen next, because they trade with the equivalent of the VEPs, volatility, entropy, probability statistics. They're the ones who have the speed, meaning the connection to the market, that is the fastest. So their orders get executed first. They're not just on the books first, not just on the books next in line. They get executed first. So they can enter and exit with profitable trades millions of times per second. And so, yes, they control the market. Anyway, that is why you should not get sucked into the exuberant irrationality or the irrational exuberance. And you should instead trade the VEPs. And that's it. Okay, that's it. Happy trading. See you in the Alpha Trading live stream today, starting at 9 a.m. Eastern Time. Ciao.